All right, so let's go ahead and do a trade recap that I took this morning because today was a really good day for trading, and I kind of want to walk you through what I was looking at, why I took the trade, where I took the trade, and show you exactly what to do. That way you can hopefully implement these same trading concepts into your trading style and help you become a profitable trader. All right, so first things first, let's go ahead and go to the 15-minute chart. Okay, and on the 15-minute chart, zooming out, what's one of the first things that kind of sticks out? Well, we have this gap right here, right? And this is a CME gap. So basically, when the market opened up yesterday, we have this huge gap in price, right? So these gaps, they love to get filled. So up here at this high, that's kind of my draw on liquidity, right? You can see that we have the bottom of this gap right here, and then price starts moving up to fill this gap from last night and yesterday during Asian session, right? So that's kind of my draw on liquidity. So immediately I already have sort of a bullish bias, right? Now, what's another good key level we can mark out? Well, we have this low right here. We also have this area of consolidation, which is some more lows. And then we also have this low down here. And then we could also mark out this one if you want to as well. Okay, so that's kind of everything that stands out to me on the 15-minute chart, right? So let's go ahead and we'll go to the 5-minute chart. So I'm just doing like a top-down analysis right now. I'm just seeing if anything really sticks out as far as these key levels, right? And you can see on the 5-minute, it's pretty much the same as the 15-minute, so I'm not really going to mark anything. But I am going to go ahead and mark this low right here as well, okay? Now let's go ahead and we'll go to the 1-minute chart, and we'll see if anything else really stands out. Well, over here is where we are closest to price action, right? So I'm going to go ahead and mark that low as well, because price comes up, comes back down, we create a low, comes back up, comes back down, creates another low. So that's your higher high, your higher low, higher high, higher low, and so on and so forth, right? But I'm not just going to blindly take this long right here, right? Because my draw on liquidity is up here. I'm going to wait because I need some kind of a pullback, and I need a pullback to come down and sweep one of these key levels that we had marked out, because that's where the liquidity is. Now you can see over here that the reason I didn't mark that one is because we already did come up and sweep it, but we can go ahead and leave it there just for the sake of the video, and maybe it will help you understand kind of what I'm doing. So let's go ahead and now that we have our key levels, let's go ahead and advance the chart a little bit. And right there we have New York session opened up, and I'm not doing anything yet. Okay, and then you can see prices kind of coming back down, and then it's continuing to come back down. So this is a good thing. We want price to come back down. Price needs to come back down before it can go higher. Same thing on a bearish side, price needs to go higher before it can go lower, right? So we're playing into that concept. So right now we have our high and then our low of the range, and then we also have this low right here as well. So now I'm still waiting for one of these key levels to get swept, right? I'm not doing anything until one of these levels gets swept. Now, sometimes price will just come right through it and come all the way down to maybe get all this liquidity down here. You know, we have these lows that we marked out, we have these lows over here that we had marked out. You know, nobody knows where it's going to stop. I don't know, you know, so any one of these key levels will do. There's nothing it doesn't matter which level gets hit. I just need a level to get hit and then an inverse fair value gap as my entry to place my trade, right? So we'll go ahead and advance the chart a little bit and see what happens. Okay, as you can see, the price is just kind of hanging out in this range. And then right here, we do start to come down to grab this liquidity or this liquidity right here, right? But in that process, what do we have right here? We have a fair value gap. Okay, that's very important. So we'll go ahead and mark that 1 minute fair value gap. Okay, still not doing anything yet because this level hasn't got swept. This level hasn't got swept. I don't know if price is going to come back down and just start making lower lows. I don't know. Nobody does. Okay, so we're just waiting. Okay, so as you can see right here, that this level that we had marked out did get swept. Now I'm anticipating this level to get swept and then maybe getting a reversal off of that. Or we're going to wait for some more levels to get swept and then try to catch a reversal off of that. So we'll see what happens. Okay, so as you can see right here, this level did not get swept. We do have this level that we had marked out that got swept, and then we inverted the 1 minute fair value gap. Now, I know it's kind of hard to show on replay mode, but it didn't just shoot up that fast in one candle. The price action did come up, and it was kind of dancing around this 1 minute candle with live price action, and that is, in fact, where I placed my buy entry, right? Now, why did I go long? Because we have a draw on liquidity up here, so I'm looking for longs. We have our key level get swept, which is sell side liquidity here, here. It doesn't matter that this one didn't get swept. Would I have liked it to get swept? Sure, because that's just higher probability, right? I don't really like how this level right here didn't get swept and it just left it behind, you know? But sometimes that's just what's going to happen. Everything's not going to line up perfectly. But we do have a sell side get swept, and we have our inverse fair value gap, and that was enough for me to go long right there, right? And I just did a 2-to-1. I didn't want to go stop loss below that recent swing low because that would only give me like a 1-to-1 because I was just targeting this high that was the high from New York Open, right? So that was my target. So I try to do a 2-to-1. 1-to-2 risk to reward, and you can see that this trade played out perfectly. Now, obviously, I could have got a lot more out of it, but that was still 43 points right there on Nasdaq, guys. Like, you don't always need to go for these huge home run trades. I could have did that trade right there, and then we could have got more of a pullback, and I could have did another trade to target this draw on liquidity up here, right? But that was enough for me today. We have our sweep of liquidity, and then we have our inverse fair value gap as our entry. So simple stuff. 2 steps. You have actually 3 steps if you want to use a bias. You have your bullish bias, which I did because I have my draw on liquidity up here, and then we have our sweep of liquidity, and then we also have our inverse fair value gap, and that's it. Now, also, if you want to get really technical, you can see that right here we have a 15-minute low, right? So that was our CRT, our candle range theory. Price came down, we created a 15-minute low. Then we wicked into the 15-minute low as well as taking out this sell side. Then price started coming back up, and that's where we got our inverse fair value gap right there. So going back to the 15-minute chart, you can see exactly what I was talking about. So right here, we have our 15-minute opening candle, okay? Price comes down. That's our 15-minute low. New 15-minute candle opens. We sweep that liquidity, and then we also sweep the low of the previous 15-minute low, and that's our candle range theory right there. That's our CRT. If you guys want to know more about the CRTs and exactly how I trade, you can watch my CRT video, and then I also have an inverse fair value gap video that you can watch to really tie all these concepts in and help you become a profitable trader. If you also want to know more about my indicator that already automatically marks out all these key levels, as well as marking out the inverse fair value gaps as our entry signal, you can go ahead and check that out in the description of this video. And I really hope this helps, and we'll see you on the next one.